Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about Delta Airlines. So I hope you guys enjoy it, and overall, I hope you guys learned something. And if you guys have any questions, go ahead and ask them down below and I will get back to you as soon as I can. And also, if you guys want to sign up with Moomoo, you guys can literally get a free stock just by signing up. That will be down below for you guys. So now let's jump into it, roll the intro, let's go. Bam! Alrighty guys, so we have ticker symbol DAL, also known as Delta Air. And you guys can see before the whole recession hit, you guys can see we had this beautiful upward trend in the chart. Some nice support at around $50, some resistance here at $63.70, highs at $63.70 as well. So now once this stock fell off, it fell 65%, found some support here at around $19. And found some resistance up here at 37. So now looking at this chart, is it worth it to get into it? Well, let's look at the overall trend right now. Right now, looking at this chart, we are still in this type of trend. So if you guys are getting into this stock short, I do think there is a possible short opportunity. Did we miss the short opportunity because the stock fell 65%? You know, with all that being said, it's hard to say. I do think a lot of this has to do with the overall pandemic. So how quick is it going to be where people feel comfortable traveling on airlines like they did in 2019? Is it going to take a year? Is it going to take 2 years? I personally think it's going to take around a year and a half for, people to feel comfortable traveling on air, for people to feel comfortable going to cruise lines. So with that being said, stocks always have a tendency to look in the future. So now, is it worth it to get into this position at $28? Now, if that's say you guys got in at 28, if that's say we said, okay, 2020 was a complete crap show, okay, but in 2021, they made the same revenue that they made in 2019. Is it a fair buy to get into this position? The answer to that is no, it's not a fair buy. The reason why I say that is because that company is going to have to stay afloat for 2019. So one, they're not going to be making as much revenue. Two, they're going to be taking on a lot of long-term debt. Three, they are going to be buying back shares of their company, which is a bad thing, really. I don't like that. But another thing too is they just cut their dividend. So for all of you dividend guys like myself, this isn't even a play for us. This isn't even an opportunity. Is this an opportunity for a swing trade or maybe a long-term investment? There definitely is an opportunity there. If you guys have a nice solid base of ETFs, blue chip stocks, and a variety of other high quality stocks or ETFs, I do think taking a little bit of your money, putting it towards a more riskier stock is worth it. I really do think that should be the case for a lot of you guys. But if you guys only have $100 in your account, should you buy Delta Air? No, you shouldn't. There are a lot of better opportunities out there that have more ROI, in my personal opinion. So now let's look at the financial statement. So as you guys can see, there was an overall 212% increase of cash on hand. The reason why companies save cash on hand, I literally looked it up so I could be right. The reason why they keep cash on hand is for one, to pay dividends right in here. Two, to buy back shares of their stock, which is an overall pretty bad thing for investors. I don't like it, but some people do. I'm not a fan of it. And then three, they have a little extra money just in case if the stock has, or if the company has a hard time, in the field. And they are having a hard time because people aren't traveling. So now looking at the long-term debt, you guys can see that there was an overall 32% increase of long-term debt. This is what concerns me about a lot of these airline stocks. Yes, this wasn't as nearly as bad as it was in 2017, and I understand that, but this is still a nice increase of long-term debt. I am not a huge fan of debt. I do think a lot of companies have to have it to, keep their companies afloat and for them to overall make money. But it's just something to understand that this company is increasing their debt. So if people aren't traveling for, let's say, the next 2 years, how are they going to get through that time? Realistically, they're going to take on more long-term debt. Let's go ahead and go to revenue. The revenue was a 17% decline. So looking at the stock, the stock fell 65%, but the revenue only fell 17%. So there is an opportunity there. Now the gross profit, look at that as well. This is where, this overall profit got hit pretty hard with a 39% decline. So, with everything going on, this company is going to be, a little more essential than cruise lines, I do think, but it's still a little risky. So here's what I would recommend doing. I would recommend building a nice solid base of ETFs. 2, if let's say you guys already have that, now you guys can get into this position. So now, do I think it's a fair buy at $28? I do think that's a fair buy. I do think that there is an opportunity for it to go back up to 38. And if let's say it falls back down to 19, you average your position here at like 23, 24. And once the stock breaks above all this, you're going to be in a ton of profit, guys. That's what I would highly recommend doing. So make sure you guys have a nice solid base of ETFs, blue chip stocks, that are more reliable than Delta Air. So that is it, though. I hope you guys enjoyed the episode. And if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall, stay safe out there. And thank you guys for 5,000 subs. I can't wait for hundreds and thousands of more videos. And I hope you guys really get a lot from them. And it's really greatly appreciated by me, guys. Take care. Have a good one. Bam.